Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be trading the 920 and the 9 EMA strategies live. Right now, we've got a 920 trade on that we scouted out yesterday, and boy, I will be real honest with you. A couple of things on this live stream. I got a few rules. Number one, if it makes money, it's the right answer. Number two, asking questions is a heck of a lot cheaper than losing trades. And number three, we don't run from losers here. We lean into the losers. We lean into losing trades because it's important that we understand exactly what's happening to us. Every time you lose, you remember you're buying information. You are buying information, and that's absolutely important. Every dollar that goes out of your account on a losing trade, there's some of them that are absolutely brutal, and you shouldn't have taken the trade in general, and those are mistakes, and that's a wasted money. But when you trade within the framework of an approach like the 9 EMA or the 920, and you do lose, it's important that you study those losers and try to draw a few conclusions of maybe how you could do things better, or maybe how you can avoid trouble in the future. Remember, a strategy is never complete. You're always working on it. You're always tweaking it. Be consistent. Be dedicated. You can come out on top. But right now, we've got a dollar-yen trade that is just ugly. We've got a weave formation. I'm going to break it down for you, but it's not going well. To be real honest with you, I'm not real happy with that performance. Our fundamentals were there. Our technicals were there. It just didn't work. We're going through a consolidation phase. We're not dead yet. We're not stopped out yet, but I got to tell you that if I was betting right now, I'd say we lose. In any case, right now, it's good to see everybody back in the room. I'm not negative. Hey, listen, don't look at losses as being negative. I'll be real honest with you. A little psychology. Anybody that likes losing is going to be a loser. I hate losing with a passion. I hate it. But there's a time and a place to understand, okay, if we do take a loss here, I need to learn as much as I can from the loss and then move on stronger next time. If you enjoy losing, you're going to lose. You're going to be a loser. But losing is part of this business, and we got to make sure that those losses are manageable. If they're not manageable, you're going to get crushed in the long term. And quite frankly, if you're taking huge risks, more than likely, you're going to get crushed in the short term as well. So we're going to go right out to price action. Let's just get right after it. Good to see everybody back in the trading room. JC, good to see you. Bobby Bob, hi Shane. What next now? Bitcoin's above 100K. How do we trade it? And WTI and gold, absolutely, Bobby Bob. We're going to go to Bitcoin next. That's going to be up next. We're also going to spot some 9 EMA trades live and do a few of these other crossover trades as well on shorter time frames. We've also got a trade review on the Aussie CAD that missed our entry point by about 4 ticks, which is absolutely unbelievable. And then you've got rotational trading right now in gold. I think we've got a pretty good long entry I just put on, demo dollars, but I put it on just a second ago. And then U.S. oil's coming off a bit. I do believe we're going to get our bearish break in U.S. oil, but we've really got to be careful with NFP coming up tomorrow. So I'm going to preview NFP. I'm going to go over some 920. We're going to trade some 9 EMA. Also, there's a few news cycle things that we need to talk about. But other than that, I mean, we're locked and loaded, so I will definitely get to those assets. But everybody else, Mark Corp, good to see you. Arshad, always a pleasure. Arshad, hi Shane. Wow, Bitcoin is up and gold crash. I can't keep up with it all. This is a big day. That's for sure. This is a big day. Why do you guys think that things are crazy right now? I'll unpack Bitcoin for you. That's pretty easy. The dollar, though, all of a sudden the dollar's off 0.5%. Why? Does somebody already know that jobs number? I don't think so. I think the jobs number is going to come in weak. But if it doesn't, a stronger jobs number, is going to suggest that they can hold rates higher, which is the new sort of talking point coming out of Jay Powell and the Fed. We'll get to all that soon. All right, time to look at this trade. 920 EMA strategy with RSI confirmation. I'm working on the video now. The video will come out next week, next Friday. Be sure to check it out on How to Trade's YouTube video channel. That's going to be fantastic. I'm working on a few things. This might actually be one of the examples that I use, but we're going to talk about how to trade this thing. This was the setup. I talked about it yesterday. Now, we're going to blow this chart way up so I can show you where the crossovers are and where they aren't. Always remember, when you're trading crossover strategies, a 920, a 5200, whatever, an 813, the 5813, the crossovers and the entry points need to be obvious. You don't want to make a mistake just because, well, it kind of looks like a crossover. I just want to trade. Hey, I want to trade too. We all want to trade, especially after we wait forever. But this right here, let's blow this up. I'm going to show you exactly how this has worked. I thought we were going to cross right there, somewhere in there yesterday afternoon. Didn't happen. Shane, that's not a crossover. I know this seems silly and stupid, but honestly, if you're going to crossover trade, you got to make damn sure that thing crosses over. The 9 crosses the 20. It didn't cross it. It didn't cross it. Now, you got to work with the thickness of the lines. You got to do all that. Remember, it needs to be obvious. You got to see that crossover and say, okay, that's a crossover, or else you don't have a trade. So we came right over here, and then what happened right there? Right in here was your cross, and I'm going to show you that here in just a second. But you'll notice that we had to blow the chart way up. If you have to do that, then your trade probably isn't that great. It's not obvious, it's not easy, and when it's not easy, typically we lose. But where we did get the crossover was right here. So our entry point was right up in here on this bar's close. You had a couple of options on your entry. You could have bought this right up there, right around 150.60, or you could have waited for a retracement. That's why I sort of outlined this entry bar. I went at 150.60, and right now you can see down about $300 demo dollars. But right there was your crossover. Can you really see it? It's behind the candle. So I've got to go here. We've got to go through all this rigmarole. You got to see this. Bang. You got to move it visual. Move it to the front. Okay. Bring to the front. Still can't see it. The crossover happened right there. In any case, there was your crossover, and now we've sort of crossed back under it, and you'll notice just how close this is. I hate it. I hate stuff like this. See right there? There was your cross. Let's see right here. See if we can get this one going. Very difficult to do this stuff on the fly, but there it is. So there's your cross. Take a good look at that. You guys want to crossover trade it? Some of our most popular videos have been these crossover trading strategies and the 9 EMA. Take a look at what happened right there. The 9 crossed over. We got the close that told us to go long, so we went long. And then look what happened. Market reversed in our face, and then it crossed under. A couple of things you could do right there. Number one, you could take the loss right now. Okay, well, the 4-hour crossed over, crossed back under, I'm out. You could do that. The other thing you could do is just stick to your original trade strategy, which is what I'm going to do. That some call it going down with the ship. I don't really think so. I think that we've still got an opportunity to rotate back up. But a couple of things. My stop loss is down beneath that spike low on the 4-hour. Pad that a few pips, but you're looking at like a 149.60, something like that, which is about another, 58 pips. The 150 level is going to be huge here. If, in fact, we do take out that 150 zone, you can see we got some bidders down there. That's sort of going to be the bottom end. If you wanted to stop yourself out underneath 150, I don't have a problem with it. But what is happening, and we had a trader reach out to me that follows this trade. He's probably live in it right now. This thing, he goes, well, the dollar yen's consolidating. Yes, it is. This is ugly. This is the problem with crossover trading. Eventually you're gonna run into it. I don't care what time frame you're on or what you're doing. I like longer time frames because typically when we get in on a move, we get in good. Right now, this pair is completely waiting on NFP. US NFP, the dollar, sort of down 0.5%. Right now we're waiting for a move, and our market driver is US NFP. So right here was the trade schematic. I'm going to stand by it because I don't just say, oh, I'm going to take the money right now and get off. No, we're going to go ahead and let this thing roll. My take profits up here, we're looking for a top side of 151.72-ish, which I believe we can get if we get the proper NFP number. But I am going to be brutally honest. We are officially gambling right now on this trade. It hasn't gone well. It's gone against us about, 40 pips. I don't like that at all, but that's our strategy. That's what we're going to go with. That's a 920. Why did we even get into it in the first place? We were in oversold territory down here on our RSI underneath 30, and then what happened? Nice big break, bang, bang. What happens? We get our close. We get our crossover right there. We're long. Something to think about there. If you're interested in trading crossovers, remember, it's an occupational hazard. When the market goes flat, you're in big trouble with these strategies. I'm going to ride it, though. And, we're making a little bit of a comeback, 150.20. Who knows? Who knows? Maybe we rally up and grab a little bit of money here, but we're not out yet. We're not dead yet, and I'm just going to let this thing ride. It's about a 1.5 to 1, almost a 2 to 1 payoff, but about a 1.5 to 1. So I'm going to go ahead and let it go. All right, the next thing that everybody wants to know is Bitcoin, 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 Bitcoin. This is a chart that we put out. I believe I showed this in the room. I know we put it out on X several times, so if you're not following us on X, check it out, How to Trade. Sujit, good to see you. Your videos are very helpful. Thank you, Sujit. I sure appreciate it. Any suggestions at all? Drop by How to Trade, send me a message. Any of you, anybody in the trading room, you want to see a video on the YouTube channel. Right now, we've sort of put a halt on the Academy inside the room, but the YouTube channel, if you want to see an instructive video out there, I'm more than happy to build darn near anything you guys want. It's just a question of having the time and the bandwidth to get to it. But we got a pretty good plan moving forward and some good strategy stuff coming your way on that channel. In any case, this was the plan. Now, the original trading plan was if we get that big, deep pullback right there down to about 87.2, something like that, I would have loved 38% because we're not, we're fairly good at reading trends. We understood that the breakout was up here on the weekly. Now, this compression, and realistically, I mean, if you guys are going to get very good at trading, especially trading trends, understand key levels. The biggest number in Bitcoin, probably for the past, since its inception, other than $1, was probably 100,000. And we dug in and we saw the compression right there. That week, the trend stopped. you saw consolidation in front of that $100,000 level. Okay, what does that really mean to us? Well, it means a lot of things. Number one, it means there was profit taking just underneath the 100,000. There was. And another thing, I would never blame any of you. We put a video out 2 years ago that was 17. I was calling the bottom of Bitcoin like at 17,000, somewhere down in there. It was a monthly 78% on the COVID range. And I said, man, if this isn't the bottom, we could be going way low. And it turned out to be the bottom. So if you bought at 17,000, I don't want anybody sitting around waiting for that last 1,500 to go up over 100,000. I'd go, boy, I'd be looking to cash that out and go buy a house or a truck or something. Whatever you want, whatever you're fancy, hit the road, travel, go to a nice dinner, whatever you want to do. I would never go from 17 to 100 and sit around and sweat out the 100 level. There's no way. And a lot of traders saw it just my way. They said, you know what? We made a lot of money on this. Let's take it off the board. Let's take it off the board. And that's what happened. Little bit of a retracement. Remember, markets don't go in straight lines. They run, they rotate, they run. This is going to run. I mean, there's no question about it. You want to be long right now. We talked about buying in up over last week's high. Last week's high was about 98,966. You got that big pop right there. Realistically, you got that big pop over last week's high, and then you took out 100, and our run was up there to about 103.6647. Full disclosure, I like a test of 105. I really do. I don't see any reason why this comes off. The fundamentals are lining up in a big, big way to send Bitcoin. You know, it's already at the moon, maybe to Saturn or Saturn, Jupiter, Venus maybe. But you can see exactly what we're looking at. Our fundamentals point towards a big rally here. Why? Trump picks pro-crypto SEC chair. You're going to get a friendly regulatory environment for crypto, specifically Bitcoin. Folks are snapping up Bitcoin. Institutions are snapping up Bitcoin. The other thing was Powell said it yesterday in his comments. We talked about these. We're going to talk about them a little more in a second. But one of the things that Jay Powell did say was he said, listen, Bitcoin's a competitor to gold, not the U.S. dollar. What did that mean? It meant that the Fed's probably going to back off of the centralized or the digital central bank digital currency, the CBDC. They're going to back off that. All that has to do with the new administration coming in. So if we look at our fundamentals all point towards more of a top side for Bitcoin. Why would it stop right now? It won't. We have to see an extended period of some selling right up in here, or some compression between a couple of key numbers before I'd even consider picking a top here. You know, it looks like a lot of those folks, the Cathie Woods of the world, it looks like they're right. You know, they're calling for $250,000 for Bitcoin, maybe $1 million. It's possible. Anything's possible. Now, I'm not going to tell anybody to put their life savings into Bitcoin at 100,000 because we'll get it at a better price. But this trend right here cannot be ignored. And I would be surprised if over the next 3.5 or 4 years, if you don't see Bitcoin continue to rise in a friendly regulatory environment. That's all. So how do I trade it right now? That was the question. Bobby Bob asked the question. And it really is. It is the question. I could sit here and I could go, okay, well, that's the lay of the land for Bitcoin. Clearly, I'm bullish. Everybody's bullish right now. That's not a secret. How do we trade it? Well, if you want to trade it, and I'm talking about just trades, there's a couple of things that we can do, and it's going to be short time frame stuff, but we can still do it. I love this breakout. This right here is absolutely beautiful. It really is an ascending triangle. There's your run up right in here. Here's your triangle and your compression, and there's your break. The only way, not the only way, but one of the ways that these triangles form is because there's a key number up there. There's a big round number. Don't ever ignore big round numbers. We're going to be trading $50 crude oil here very soon in the next few months. And I'm going to go on and on and on about how big of a deal $50 is for crude oil, because it is. 100,000, what once was resistance is now support. I want to buy. I want to buy right down in here. I want to get the best price I can to try to get a scalp, because I think we may be able to make a quick 5%. So we go to our 4-hour. What does our 4-hour chart tell us? Well, we have a really beautiful market structure. We've got a nice spike low there. We've got a nice spike high there. We've got compression. That's a classic P formation. An uppercase P. I'll just draw this for you real quick. Uppercase P. There's your run. There's your rotate. That's still very bullish. So what we need to do here is we need to figure out exactly how to trade it. My weapon of choice is always the Fibonacci retracements. I've been running retracement sequences for a long time. And that low to that high right there, when we're trending this heavily, 100, 250, somewhere in there, that's a pretty darn good buy. Now, if I was to take that position, what would I want to do? It depends on how I'm trading. If it's a derivatives trade and we're trading a leveraged position, I would be looking to buy probably right in here, 100 and 225-ish, something like that. Really a tight entry. I want to shade my entry. I want to shade it up just a little bit. Let's just, you can't even really do it with this granularity. Let's just go right there. So what we want to do is shade our entry just a little bit. Our stop loss is going to have to be tight. I would stop myself out. I'd be relatively aggressive. Look to stop myself out probably 99.4, something like that, maybe 99.408. I'm just building this on the fly. Something like that would be pretty good. You could easily get into maybe a 1 to 2 trade. And that's if you're right. That's if the trend's strong. Now, if I was taking a position, do I want to take a position from right here, this 38%? You're buying 100,000. So if you're going to take that position, you've got to stop yourself out down here underneath 94,000. You've got to let all this work itself out. So you can go long here and hold it, maybe looking for a 105, which quite frankly is my short-term topside target, something like that. It's not bad. It's not a bad trade. What's a better trade, though? If you're not going to scalp this, what's a better trade? Back into that golden zone, 4-hour golden zone. Maybe we're looking to get in there, maybe 98.5, something like that. That's a great deal. That's a great price. What if you get that 98.5? You stop yourself out beneath there, right down there. What are you risking? About what, 4,000 to make maybe 7,000 of the top side? That's a riskier trade just because you're going to be in the market longer, but you have an opportunity there potentially to do it. So if you were in fact going to trade this, I would definitely be buying pullbacks. I think that's the only thing to do right now. As far as your 4-hour, be careful tomorrow with NFP because it'll shake everything up because we just don't know what exactly the Fed's going to do in response to say, if jobs come in weak, Bitcoin's going to go through the roof. If jobs come in strong, Bitcoin may taper out here to 100,000, maybe consolidate. But I would be shocked if we don't test 105,000 here relatively soon. If you wanted to buy 100,000, maybe 100,500, you could buy right now and I wouldn't have a problem with it. Let's just go ahead and send a couple long and see what happens. Go ahead and send that long and just see what happens. So if you bought right now, where could you stop yourself out? You could be very aggressive. You could stop yourself out maybe right here underneath 50%, or you could let the whole position go, stop yourself out underneath 94, but you got to look to the top side maybe. You got to get paid for that risk. There would be your entry. I mean, the 4 hours there. I would be very conservative here, though. If this did break down, if you broke underneath 100, I wouldn't be around. I'd stop myself out. Mark Orp, hey, Shane, wow, Bitcoin up and gold crash. I can't keep up with it all. I hear you. Birds Lever, good to see you, Birds Lever. Welcome. Sujit, a round number, a psychological number. Yeah, a lot of times it's just not hard. Technical analysis doesn't have to be hard. Let's go ahead and take a look at a Bitcoin. Let's see right here. Okay, we're getting a little bit of a comeback. Don't call it a comeback on that dollar-yen 920 crossover. Let's go ahead. I have another chart here. Let's go ahead and pull Bitcoin on our 9 EMA and see where we're at. 30-minute chart, 9 EMA. Okay, we would have been looking to sell right there. You've got your RSI confirmation. Remember, relative strength index, that would have been the sell. You would have lost more than likely. I don't advise that. You're fighting a steep trend. I want buys. I want buys. So let's go ahead and add that 20 and see if we can get any buys here. Okay, that right there, that would have been your sell. So that right there's you're in overbought territory, above 70 on the RSI. There's your 30-minute chart. There's your sell. So if you were going to sell, and we didn't, we just bought, but if you were going to sell this thing, you'd have a pretty darn good trade. You'd have sold right down here. You'd be looking to take that position with a stop loss up around the all-time highs, looking for a retracement down into the 96s. I think that's a tremendous mistake using a short time frame like this, especially a 30-minute chart. Let's back it up to our 4-hour and see what happened. Okay, our 4-hour right there. You're in overbought territory, so the 4 hours looking for a sell if, in fact, that 9 crosses the 20. I don't think it's going to cross the 20 anytime soon, but if it did, that would be the play. Let's go to a daily. Now, if you guys are trading cash crypto, nothing wrong with that. If you're trading the cash crypto market, I think that you could trade dailies. You could use daily technicals. As a matter of fact, I would advise it. If you're trading derivatives, it's going to be hard because it costs so much money to play. So what do we have here? We've been in overbought territory for a long time in Bitcoin, and this is the problem with trading RSI naked without anything else. Your RSI breaks up, and you're saying, okay, well, I'm going to sell it because we're in overbought territory. It doesn't work. And the reason why it doesn't work is you get behind a trend like that, and all of a sudden you're bankrupt. It doesn't take long either. But something like this, take a look at what you had, though, back in August. That's behind my picture. But look at it in August. Daily RSI was in oversold territory. What are you trying to do here? You're trying to buy. Right there, you would have bought. Bang, bang. If you would have adhered to the crossover stop out, you'd have got stopped out. But if you would have just taken a position like we have in the yen, something like this, spike low, there's your buy. Oversold, 9 crosses the 20, you buy. Stop loss there. Holy cow. And you just let it run. I mean, that's position trading. That's investing. That really is investing. But something like that, I mean, where was your bid at? You're buying that thing at 61. You've doubled your money. That's no joke. And hey, listen, hindsight's 20/20, but that's not too bad. In any case, I'm going to go ahead and stick with what we're doing here. We've got a nice retracement, Fibonacci retracement. We went long. My entry point's not great, but I got a pretty good feeling. I mean, if you just bought it, you could already be taking a couple $100 off the market, so it's not that big of a deal. Right here, back to our dollar-yen 920 crossover. There's sort of your rotation. We'll see what happens, guys. We'll see what happens. I don't know. Jury's still out. All right, we got a couple other things that we need to go over. I definitely want to cover some more trading, some more 920 trading, but we do need to talk a little bit about switch markets. If you need a broker and you want to trade Bitcoin and the dollar yen and all these fancy assets like gold, we're going to look at gold here in just a second. But if, in fact, you want to trade all these assets, check out Switch. They have you covered. As far as our big talking point for today, it's going to be Jay Powell. Now, yesterday, Jay decided that he was going to give an interview. It was scheduled. I'm going to give you the key quote out of it because there's really one quote here that tells me everything I need to know about Fed monetary policy and what's coming our way in the next year. Powell says Fed can afford to be a little more cautious. What does that mean? It means that they're not going to cut interest rates like you thought they were, like I thought they were. The U.S. economy, this is what he said right here. The U.S. economy is in very good shape, and there's no reason for that not to continue. Okay, that's positive. The downside risk appear to be less in the labor market. Interesting. Growth is definitely stronger than we thought. Interesting. And inflation has come in a little higher. Interesting. Powell said at a New York Times event. So the good news is that we can afford to be a little more cautious as we try to find neutral. Number one, I don't know what he's doing talking to the New York Times. I guess they still have a tremendous amount of clout in sort of the legacy media space. But, I think the days of Jay Powell sitting down with the New York Times probably are winding down, coming to an end. And I say that because these old institutions like the Times, like CBS, NBC, MSNBC, all of them, they don't have the reach they once did. And this stuff right here, for him to issue this kind of comment to the New York Times basically says, we're going to keep rates higher. That's exactly what I see out of that statement. The other statement he said was Bitcoin was a competitor to gold, not the U.S. dollar. So when we start looking at something like that, immediately I want to go take a look at my assets. So we noticed that the impact on Bitcoin was positive. Bitcoin is a competitor to gold, not the U.S. dollar. I don't think it's in this article, but it was in a bunch of other ones. There's rates of inflation, yada, yada, but then there's all sorts of stuff. So in any case, that's what we're looking at there. He's very hawkish now. The idea that we're going to slash interest rates and keep slashing them like they promised in September, that ain't going to happen. Ain't going to happen. I'll keep rapping. It ain't going to happen. So what we're going to do is we're probably going to cut here in 2 weeks. When Fed meeting might be next week. I got to look at my calendar. A lot going on. But right now, what I'm thinking is the hawkish dollar in 2025, or is the hawkish Fed going to send the dollar higher? And I think it at least stabilizes, even though we're off a little bit today. We're seeing that downward pressure on commodities, especially gold. So there's a couple of things that are driving the gold market right now. That was one of them. Remember, let's see, JC, Powell has the IQ of a grape. Yeah, I think he's worth $17 million on paper. At least that's what they say online. I don't know how he made that money, to be honest. Probably I don't know if he's peddling influence. A lot of folks like to do that, but I don't know how he made his chops, made his bones. He was a banker, but I don't know exactly where the investing came in. I don't know what market call he ever made to make $17 million. He wasn't a prolific writer or a TV personality, and he probably can't throw a football or dunk a basketball. So how did Jay Powell get $17 million? Maybe his folks gave it to him. I don't know. In any case, I'm not JC. I was kind of a Powell fan for a long time. I thought COVID was the biggest, really a tough situation for any Fed chair. And I was like, wow, this guy's been dealt the hand of all hands to deal with. But I'll tell you what, this last election season, I lost all respect when they decided to slash interest rates by a half point and say they're going to keep slashing them, and then the election happens and all of a sudden we're not going to cut rates anymore and we're going to maybe hold them higher. I mean, I'm not going to say it's politically motivated, but it looked like it was politically motivated to me, and it looked like that to everybody. So I lost a lot of respect for old Powell on that one, but we're still going to cover him, and I'll be fair. I'm going to be fair with him. I just don't really know what exactly they're going to do, and the truth is they don't know either with our policy. They know unlimited QE after COVID wrecked the financial system, and I mean wrecked it. If you're in the United States or if you're around the world and you're looking for houses, I can just tell you from my own personal experience, come to the United States and look at house prices. You can't tell me that's not a function of all that money going into the market. You can't tell me that because it's not true. They flooded the market with 0% loans. Everybody and their parents went and bought $1 million houses, and that wrecked the market for the lodging in this country. It not only took housing prices to all-time new levels, but it also brought rents up on everybody. And that was the problem with shutting the world down and flooding the money into the system. Now, we've been trying to unwind this thing for 2 years, and nothing's worked. And I mean nothing has worked. So interesting type of a deal there. In any case, I put on a little bit of a long. These are sort of, I don't know, these are demo dollars, as I always say. But I put on a little bit of a long here looking at this demand zone potentially. We had a real nice 4-hour rotation zone. Did very well on a couple one pendulum trade right here. But now we're starting to really see, starting to see gold come off in a big way. It has broken out. The alligator's mouth we looked at yesterday, we've sort of broken out now, and it looks to me like we may be trending. So one of the great things about trading some of these smart money concepts and jumping on something like a supply zone, a demand zone. Demand's bid, supplies sell. So up here would be a supply zone. This would be a demand zone. One of the good things about it is we're going to know we're wrong very soon. We really will be. So something like this, where if you're buying this order block right here, or maybe this supply zone down here, this double bottom essentially is what it is. It's a 4-hour double bottom. You got a chance maybe to get in there long. I think we bought in at 26-ish. So it's, we're only down about $2, but something like this could definitely turn out to be an intermediate term bottom. The big problem we have is that we're really staring at that NFP event, and that's going to be huge. That's going to be huge. There's no two ways about it. So you're going to want to be aware of this gold. We're going to talk about gold. I'm going to throw the 9 EMA and the 920 on it, and we're going to see exactly if it's time to buy this thing or sell it. And then I'm going to throw some Fibonacci's on there as well and see if we can identify a decent trade going into NFP. So what we're going to run through here is just sort of a progression of how to look at the markets using the 9 EMA and the 920. A lot of you, so a surprising number of you out there just love the 9 EMA video. It was a video that we made, and it was a very, very basic way to trade the 9 EMA. Just basic, no crossovers, no real confirmation or anything. And this strategy here really was received well. And like I say, a lot of criticism. It's too easy, or it won't work in a flat market. And I always say, if you dial these things in correctly and you don't let the losers get too deep in your pocket and you let the winners run with a crossover strategy or a moving average strategy, you're probably going to succeed. Now, as far as what I always say, to succeed with anything, you've got to be consistent and you've got to know where to set your stops at. You've got to. And we cover that in the video, so if you haven't seen that one, check it out. This is another one that we had, how to use the 20 EMA. We're going to have another one out that's the 920 EMA, and that's going to be next Friday. Working on it now. So this is sort of what we're looking at here for our strategies. So let's look at gold sort of within that sphere. We've already talked about the rotation. I'm playing rotation here, these order blocks. The reason why we would be playing something like rotation is because we're absolutely flatlined, and I'm not necessarily certain that you're going to see a big breakout ahead of NFP. So even though we're down a couple of $100 on this trade, I'm still fairly confident that you're going to see some bidders step in here at 26.25. If they do not, we may be going much, much lower. So the question is it time to buy gold based on some of these other strategies? Very, very tight gold market on the daily. So if we were looking at this on the daily, what would we be looking to do back here? Okay, this is a 920 EMA strategy with RSI confirmation. RSI has us in overbought territory. What are we looking to do? We're looking to sell right there on that crossover. And boy, did you get it. You got it. So you got a pretty good sell right there. There was a pretty darn good move down there to about 39. That's not bad. That's a pretty good move on a daily. And then what happened? Well, we almost got into overbought territory, and we didn't. So we're just sort of milling around, and you can see the market's absolutely flatlined. Absolutely flatlined. Are we making a move now? Looks like we are making a little move. So is it time to buy it? According to our daily 920 EMA strategy, no, it is not. Now, let's take that down a little bit. Once again, there was your 4-hour. Sell is clear as day right there. Overbought territory, that would have been your sell. You got a decent move. Not really a great move, though, because you would have sold probably, right here? That would have been when the crossover occurred. So you really only got a little bit of continuation, and then the market sort of blew up in your face. The good news is if you took that trade on that crossover and your stop was up here or maybe even right there, you could have put it right there above that swing high. You'll notice that swing high right there. You could have put your stop there. You'd still be riding this thing south, and it's not looking too bad now. So the real question is we just put a buy in because we were sort of in rotational conditions, and now we're breaking. Can we buy it according to this strategy, the 920 crossover with RSI confirmation? No, we cannot. Why not? Because we don't have that buy signal, the buy confirmation from the RSI. So the way that I would look at this is I would look at my RSI first and say, all right, are we in overbought or oversold territory? We're not quite in oversold territory because we're not beneath 30. As soon as this RSI touches 30, but goes beneath 30, then we can look to buy the market. And we'll do that by getting a 9 EMA cross over that 20. It's that simple. So we're getting into a position where we may be able to buy this thing. We just have to wait and see what happens with price action. I really do recommend the 4-hour chart for gold. I like that. I like the dailies and the 4 and the weeklies and the monthlies. Love those levels for gold. Those are really strong levels. Let's take it right down to a 30-minute chart, though. Right now, we're moving. Okay, we're moving. Are we looking to buy this thing on a 30-minute? Almost. We're just flirting with that over sold territory. We may, in fact, get an opportunity to step up and bid, and when we do, we're going to have that 9 cross the 20. This is an easy strategy. It really is very simple. It's intuitive. As far as the 9 EMA, so let's say we wanted to trade the 9 EMA. It's really going to work the same way. You're just going to take your 20 off. And instead of trading crossovers, what are you going to do? If you're going to confirm with RSI, very simple. Down here, you would have been in oversold territory back on the 1st of December. Oversold territory, what does that mean? It means you're going to buy on the first candle close over that 9 EMA. And once again, your success is always going to depend on where you put your stop losses and your profit targets, always. Now, as a tick scalper personally, if I enter a trade and it pays me, a few ticks right away and it's easy, I call that painless, then I take the money. That's been a rule of mine forever. Painless. Let's say I buy in here. I buy gold at 26.25 and immediately it springs to 27.50. I'm out. I'm taking the money and I'm going home. And you say, Shane, that's counterintuitive. Well, no, not really, because markets don't move in straight lines. You could easily get that initial run, a pullback to your break even before the market really takes off. I say if the money's easy, take it. Now, that may be wrong. A lot of people don't agree with that. I've talked with several traders that say, Shane, you're crazy. What are you doing? And I said, well, I'm living life, trading the way that I want to trade. I recommend you guys all do that. Trade the way you want to trade. I get the questions about trade management every single day, and it really is the most important thing on the board. Balancing risk to reward, understanding where to take a loss and where to take gains. I focus on the loss end of it because as long as I'm insulated, as long as I know my maximum downside liability, then I can either shoot for the moon or take small profits. Either one's correct. Just be consistent. Be consistent with what you're doing. Let me see, Bobby Bob, how do I get RSI and MT5? I'm going to have that in the video next week, Bobby. I don't have MT5 pulled up in front of me, but I do believe it's under the relative strength index, and that should be under oscillators. I'll go ahead and take a look at that and get back to you. Good question, though. Good question. In any case, right there, you would have had your bid. Your bid would have been there, and you'd have made a stack of money. Stop loss would have been right underneath this swing low. So let's take a look at our trades. How's our U.S. dollar Japanese yen trade doing? Not too bad. I mean, we're only down a couple hundred. Price is sort of oscillating back up to entry. The trader that private messaged me earlier today said the Japanese yen or the dollar yen has entered rotation. Is 100%, 1,000% correct. we're moving sideways. I don't know that we move anywhere ahead of the Tokyo Open or NFP tomorrow. So that's a big deal right there. As far as Bitcoin, where's Bitcoin playing at? Bitcoin's in rotation as well. Nice P formation. That's pretty good stuff. As far as our gold, if we're trading the 9 EMA on gold, we're almost into buying territory. 30-minute chart. Do you want to play a 30-minute? Nah, not really. I would focus on a 4-hour, but you're a lot further off of your long here on the 4-hour than you are in the 30-minute. So definitely something to think about there. Okay, let's see. We had one trade idea that I had out yesterday that was frustrating. This was a beautiful thing right here. We had really a 62% level that was coming into play for the Aussie CAD up there at 90.78, and I had my entries right around 74, I think, somewhere in there. And you'll notice that high right there went up to 71. Very difficult when you're in the written form to call the trade entry absolutely correctly. It is. And in the live market, if you see price get within a few pips of your entry, maybe you just enter. I always say just stay disciplined. You'll get enough of these trades as it is. But this was really good. This was a big 4-hour move. We saw the retracement. We said if you get a shot to sell that golden zone, you probably should. And it's been a fantastic trade already if you got it. But that would have been a tough one to get because it didn't hit our entry point exactly. As far as what we could look at for U.S. oil, there's definitely a couple of things that I would be cognizant of for U.S. oil. Our long-term levels, remember those. And I would never look at a 4-hour chart for oil, ever. 30-minute chart during the U.S. trading day. What do you have today? Nothing. Not much. Really just rotation. We're off about 0.32%. I mean, if you, in fact, wanted to make maybe a late-day trade, you can look at this daily bottom right here. You really had just a sort of a rally here. Bang, compression break, and then we sold off, and maybe down there you could have bought towards the bottom. You could probably still do that if you wanted to, the bottom of the U.S. range. I would steer clear of U.S. oil intraday trading today, though. This is a very, very ugly type of an atmosphere. If, in fact, you were interested in trading it and say, Shane, I want to trade oil today, I'd say, all right. Then let's go ahead and look at that. Focus on that U.S. session right there. Spike high, spike low. There's your pullback, 68.50. You got a moving average right there as well in the 30-minute time frame. Probably a pretty darn good sell, 68.50-ish. You could probably scalp that. Crude oil futures, same basic game plan. That's how I would approach it anyways. 68.54. What's this high? 68.50. It's just really tight. It's going to be really difficult to get any money at all out of this. You may want to maybe wait for a run up at the highs and sell the highs. I know you can get away with that, but as far as this goes, it's tough trading. Let me see Marcorp, MT5 RSI in under indicators, oscillators, relative strength. There you go. Yeah, I figured it would be under oscillators, but yeah, Bobby Bob. It's not just RSI, it's the relative strength index. I don't know. We might have a little trade going here. Let's go to our trading dome. What do we got? 54 here. Guess we could sell right there at 53. Shade this. This would be the U.S. range, 38%. I don't necessarily know that this is the best way to trade this just because we're not trending. And when the market's not trending, you really don't want to step up and sell a 38%. That's more of a trend play or a market that's active. But if, in fact, you wanted to scalp with probably a higher efficacy, you get a rotation up there towards 78% of this New York range. You'll get paid there, probably right beneath 68.92, and definitely right beneath, like 69.09, something like that. You'll get that sell as well underneath the New York high. But as far as trading down here, odds are we'll get paid off, but you just got to really watch that you don't get stuck in a late-day rebound. I would call that a higher risk trade for sure and certain. All right, everybody, I've gone on long enough. One last thing from a fundamental perspective. We will have NFP live for you tomorrow. And just a quick look at the numbers. What are we expecting? U.S. non-farm payrolls are expected to come in at 202,000, above 12,000. 12,000 was the number that we posted last month. Remember, downward revisions have been the key. Tune in tomorrow at about 6:20 a.m. I'll go through all this stuff and get you prepped up and ready for the number, and then we'll go ahead and trade it. But as far as what I would be looking at right this minute, I think you're going to see a real ugly number tomorrow. I really do. I think you're going to see a real ugly number, and that's just sort of been the trend for 2024, at least with the NFP numbers. But as far as the big one that I'm looking for, we just got our trade. There's our scalp, and it's blowing up in our face. right there, your unemployment rate, 4.2%, expected to tick higher. Boy, I would be ready for like a 4.3, maybe even a 4.4. So something to think about there. And you're seeing crude oil sort of rotate higher by a few ticks. Yeah, challenging market. I would be selling right up there beneath 69 if I was intraday trading. Too tough of a chart, guys. Sometimes you just got to pass. All right, everybody. I want to thank you for joining me. I ran long. I got to start toning these streams in just a little bit, but just one of us now, so we're just trying to get the good feel and see exactly when the best times are to stream and the length and everything you guys want to know. If you have any questions at all, swing by the How to Trade trading room. Send me a private message. I'll be sure to get back to you. But as far as the rest of this goes, it's all about NFP right now. Long on that dollar yen. We got to wait and see how that comes out. Long on Bitcoin. And then also we've got a little bit of a bid going there on the gold trade, and I think that's one's doing pretty good. Yeah, this gold trade's gone positive, so that's a positive thing. That's definitely a positive thing. All right, everybody, until next time, trade the action well, and we'll talk soon. See ya.